Hey everybody, Crypto Mentor 99. How you doing? Hey, I'm doing a few quick videos. November 19th, I had to make it Friday. It's lunchtime. Video number 1 below, Hillary Clinton and Bitcoin. Video number 2, my bank is empty. Here's a video that includes Michael Saylor, who hits another home run out of the park.
Yes. Now is Michael Saylor, MicroStrategy Chairman and CEO. We constantly talk about the regulatory overhang, Michael, and we got some new data points on Wednesday. You know, Republicans and Democrats have different views, but all of it looks like there will be more scrutiny. You continue, can I call you a stacker? MicroStrategy is a stacker. You added, what, 9,000 coins?
Giga stacker. Giga stacker.
You added 9,000 coins. I think you're up to about $7 billion worth. I don't know if I did the math on today's price, but out of your entire market cap of 7.4 billion. For a while, in the mid 60s, everyone was up. Everyone had made money. That's not the case anymore. Would you stack right now? Would you wait for a further pullback? How do you do it?
We're going to keep stacking forever, Joe, forever. Yeah, the issue is crypto's going mainstream. You know, we hit all-time highs last week, and now there's volatility. Inflation's gone mainstream, and so what's causing the volatility? The volatility is driven by exchange leverage, the altcoins, some security tokens, DeFi, wash trading, the novelty of crypto, and the excessive growth, right? And that doesn't surprise me. I think people have been waiting for clarity from regulators, and over the past month, we got a lot of clarity. The report on stablecoin is telling the world that they want stablecoins issued by FDIC-insured banks. The Crenshaw report is telling the world that DeFi as we know it will not continue. The spot ETF denial report is telling the world that the regulators want crypto exchanges to meet national securities exchange rule and standards. And the infrastructure bill is putting into question staking and DeFi. Now, there's one thing that's for certain, Joe. The world wants two things. The world wants a digital dollar, US dollar, and they don't want 100 billion of it. They want 10 trillion of it or 20 trillion. The Chinese want it. The Africans want it. The Asians want it. They want it from an FDIC-insured bank or like. And the world wants a digital asset that's a store of value, and Bitcoin is universally accepted as that common property store of value. So those two things are clear. Everything else is murky. The market's trying to sort out what all this means.
We're getting a lot of data points, you said that earlier, about inflation too. And gold made a move. Finally, it made some people are surprised it hasn't made more of a move, and I think you can go back, I don't know, can you go back a decade? Probably, and we're a little changed. Is it your view that Bitcoin has replaced or will replace or is in the process of replacing gold as the store of value for most investors?
There's a war. Yeah, there's a war for non-sovereign bearer instrument store of value, and it's Bitcoin versus silver and gold. And gold's 10 trillion and Bitcoin is 1 trillion. And it's pretty clear that Bitcoin is winning, gold is losing. Of all the commodities in the world, the only one that isn't suffering from inflation in the last 12 months is gold. You want to eliminate inflation, build everything with 24 karat gold, it won't go up in price. Bitcoin's definitely winning that struggle, and it's going to continue because you can move $1 billion block of digital gold at the speed of light. You can program it 60 times a second, and the maintenance cost is much lower. The custodial rates are much higher. So it's pretty clear that digital gold is going to replace gold this decade.